In this lecture and the next 3 lectures, we will go through some examples about the components of the lease payments. Here is the first example. A lessee leased a sales outlet for 5 years. Lease payments were $100,000, payable at year-ends. The interest rate implicit in the lease is not readily determinable. The lessee's incremental borrowing rate is 8%. The lessee has an option to purchase the sales outlet for $2 million at the end of the lease term, and there is a reasonable certainty that the lessee will exercise the purchase option. Figure out the lease liability and the right-of-use asset on the commencement date. Here in this lease example, the lease payments include fixed lease payments in addition to a purchase option to purchase the sales outlet at the end of the lease term. Here, the annual payment is $100,000, 8% which is the lessee's incremental borrowing rate, and the lease term is 5 years. The years of the lease term in the first column, and in the second column, the annual payments, $100,000 which are the fixed lease payments that are payable at the end of each year for 5 years. In the third column, at the end of year 5, which is the end of the lease term, insert the exercise price of the purchase option amounting to $2 million. And this is included in the lease payment, as there is a reasonable certainty that the lessee will purchase the sales outlet. In the next column, the total annual lease payment, and note that the lease payment for year 5 includes the exercise price of the purchase option. The present value factors in the next column. The present value for each payment, then sum the whole column, and this is the lease liability on the commencement date. Let us move to the calculation of the right-of-use asset. Insert the initial measurement of the lease liability. No other components were mentioned in the example for the right-of-use asset, so the right-of-use asset at the commencement date is here. Let's move to the next example.